Hey, what's up guys? John here. California is coming out with this new insane wealth tax that they're going to be pursuing on property owners that hit a certain threshold. If your value of your property is higher than $8 million, people say, oh, $8 million, it's too much. In the beginning, it will start at $8 million. Then it will go to 7, then it'll go to 5, then it'll go to $1 million, and then it'll be your house. What's happening in California, regardless of threshold, is something we all need to pay attention to. And on this channel, I talk about personal finance, real estate, business, and money, and I pay close attention to all the details about what's really going on in the economy so that we can move and pivot ahead of time, because most people aren't going to see this until it's too late and they're going to get in the grips of what is to come. Take a look at this situation here. Santa Monica Mayor proposes measure that would increase taxes on expensive real estate. Santa Monica Mayor Sue Himmelrich has proposed a new tax on real estate sales over $8 million at $53 per $1,000 of each property's cost, as reported by the Santa Monica Lookout. This came out today, May 20th, right? And so you would say, okay, well, $53 per 1,000. What does this look like, John? What are the real numbers here? Well, let's say, for example, it's a $10 million property. And they can define costs several different ways. They can define costs by simply saying that it is the cost to duplicate or replicate, meaning the land value and new construction costs for the day, or it could mean cost as in what it actually sold for. So regardless, the difference wouldn't be too much. If land was $5 million and it would cost $4 million to build it, especially in today's inflationary environment with supply chain issues, it could be between $9 and $10 million. Now let's just use this example for $10 million. Easy numbers. $10 million divided by $1,000 per cost would be $10,000. And then $53 per 1,000 is a tax of $530,000. $530,000 tax because your property is worth a certain amount, right? And so the funding for homelessness prevention, affordable housing, and schools hopes to raise $50 million in the first year. Well, all they would need to do is hit 100 property owners, and they would hit over $50 million. But this is going to go towards affordable housing and homelessness. Look at what California as a state has done for homelessness. It's probably one of the most mismanaged states when it comes to homelessness. You go to downtown LA, you go to even Venice Beach, Santa Monica, Beverly Hills, you go to any of these nice communities, what do you see? Homeless people that, they say that they're helping, but you see all of these homeless people that don't seem to be getting much help to me, and they want to help with affordable housing by taxing people that are supplying jobs. People that own $10 and $20 million homes, they're not running a solopreneur business where it's just them and one employee. No, they probably have 50, 100, 200 employees. And so they're bringing value to the state of California. They're bringing tax revenue. They're bringing a lot to the table. And you're going to tax them $530,000 is what California wants to do per house. It's pretty crazy to me to see the direction of where this country, where California especially, is going right now. It's very concerning. The first $10 million or the first 20% raised with a proposed tax would go to the schools in Santa Monica. The remaining 80% of the funds would go towards the homelessness prevention and affordable housing in Santa Monica. If the tax makes more than the expected $50 million, the money will be deposited into funds set aside for the schools or homelessness prevention and affordable housing at the same 80-20% rate. The measure states that it is fair and equitable and right. I don't see how it could be fair, equitable, and right to steal from anyone. I was never raised that way. I don't believe someone else's wealth or someone else's opportunity or blessings I deserve, that should be mine. That to me that's theft. This is crazy to me. This is absolutely crazy. The measure states that it is fair and equitable and right for those property owners who have benefited and enjoyed the benefits of the city services and programs will leave a small portion of the proceeds with the city to help fund programs that need the most help and are a part of the future health of the city and its residents. Well, I would disagree with that. How could it be fair and right when you sell a property, and this property, the terms and conditions are these are property taxes, this is your responsibility, and then the buyer says, okay, I'm okay with that. I'm gonna go ahead and make the purchase. And then down the road, they say, oh, by the way, you owe us $500,000. We're going to take this equity from you. What if you don't have the $530,000 in equity in the property? What if you bought it the last 5 years, interest rates are skyrocketing, the economy is facing some trouble, we can see it in the stock market, we can see it across the board, and then you have $500,000, $600,000, $700,000 in equity, and then they take $530,000. Or you don't have that equity at all, And then where's that $530,000 come from? If you have $400,000 in equity, do they take the whole $400,000? You leave with nothing? This is what it seems like to me. Himmelrich and her husband, Michael Soloff, who is a former housing commissioner, are working together to put this tax proposal into action and funding with campaigns themselves because she believes that it would be more likely that the tax proposal would actually pass. Do me a favor. Do yourself a favor. Do this country a favor. If you don't want this to pass, simply hit the like button because YouTube's going to share the content. The more people that hit the like button, the more people that are going to see it. If you could share it with people, know anyone in California, just share this video. The more people that see it and are aware, the better. As quoted by the Santa Monica Lookout, Himmelrich said this proposal is dedicated purpose tax measure in which only requires a majority vote among the voters in this city as proposed to the 2/3 majority that would be needed if the proposal was put on the vote by City Council. However, a dedicated purpose tax measure is much more of an expensive proposition than putting it through the City Council. Himmelrich and Soloff expect that it will cost $200,000 to fund putting the measure on the ballot and other affiliated costs like the bill for hiring the law firm to draft the proposal, and $100,000 that will be spent on gathering signatures to get the measure on the ballot. This would require 6,800 valid signatures from Santa Monica residents, but the campaign is aiming for 10,000 signatures to make sure that the effort will succeed. The rest of the money earmarked for this campaign would be used for publicity to encourage voters to pass this measure if it makes the ballot on November 8th this year. This is the second time in as many years as the tax proposal has been advanced to increase what is known as a luxury transfer tax measure. Santa Monica was passed in 2020, and it doubled the tax on sales that exceed $5 million from $3 million, from $3 to $6 per each 1,000 for each sale. Measure SM was very popular and passed. Now, this is where we're going. You know, as a society, we have to ask ourselves, is this what we want? Is this what we want for ourselves, for our families, for our children? To where we are, we're pushing off the responsibility. We're stealing from other people. It doesn't matter what side, if you're, on this side or this side, it's just what's right. Is this actually right to go after someone else's wealth, to go after someone else's property, their inheritance, to steal from other people and then just give the money to the state, and then the state is going to own it all? Like, it is, to me, is this really fair and equitable? When you take away opportunities and then you just give it to the state? It's a question I have for you. And a big thanks to my subscriber who shared this article with me, this information with me, because otherwise I would not have known about it. If you come across any information that you think is very relevant to the economy, to real estate, to business, if I happen to miss it and I didn't hear about it, I will do my own research and I'll cover this for you. My goal is to give the most accurate information possible so we can all make smart financial investing decisions. Drop your comments below on what you think about this. Please hit the like button, share this video, subscribe, and also subscribe to my second channel. It's going to be an interactive podcast starting next week and a show where people can call in. Also, follow me on Instagram and TikTok and LinkedIn. Everything's in the banner, and I'll catch you guys later.